Good afternoon, George Cavaligos for HFT Bonds. Well, holiday shortened day, volumes are obviously very light. Markets backing and filling after the big short covering rally that we saw on Friday. Actually, on the 10-year, we had a bullish reversal trade after we had a bearish reversal trade on Thursday. That's the stuff that just reeks of consolidation. Chop sideways, frustrate, hard to catch. What else? So far today we've put up an inside day. And, the market never followed through on the bullish reversal day. That should have seen a retest of the 07 half level, the high from Friday. And we haven't done that yet. The problem with that trade is the stop is way down at Friday's lows, which if you look at a 24-hour chart is 130, 122. That's an impossible trade. Nobody could do that trade. I thought we'd see a little bit of an uptick last night as our friends in London came in this morning. They tried. They just couldn't get above that 4.5, 5 level. And actually, there's a small gap that we left on the 10-year chart up at 4.5 to 5. And on the upside, I was, thinking we'd see some kind of a trade. I should have got out this morning when it never followed through last night. Stocks are making new highs in the S&P. The Nasdaq isn't quite making new highs yet. It's still laboring. And some of that divergence is worrying me a little bit on the equity side. Let me just close out here. That's why we're getting this blurring here. I have to close out a couple websites. Give me 2 seconds here, guys. I'm sorry. Okay. The 10-year is giving us these signals, but the bonds really aren't. We didn't get the bullish reversal day on Friday. We did have an up trade, obviously, but it did not make new lows the night before to give you the reversal. So we've had basically on the bond trade two inside days in a row after the big sell-off of last Wednesday. So, guys, I want to play this both ways. I don't want to have a huge opinion. I think the market is consolidating in this range. I'm a little bit concerned that we're not getting above some of these resistance levels, and we didn't fill the gap in the bonds last week when we rallied. So there's some warning signs for the bulls here. Tomorrow we have a small tips buyback. $1 billion is not that much. I just want to see this 130, 127 plus level in the 10-year hold. The bonds have already sort of traded through their C equals A, move off of the highs from Friday at 145.14. We've got some minor support down at 145.09. If we start trading much below that 145.09 level, then we got to start talking about retesting the lows again here. And we'll start breaking the uptrends on both the daily and hourly. We've already kind of traded through them at the lows from Thursday night on the move down there. We sort of broke the trend line, but we never closed below it. And I think this corrective move is getting a little bit old too. I see the market bouncing off these lows from a couple weeks ago, and we just really haven't made tremendous upside progress. I'm thinking on rallies here we might have to take a look at buying some more of that TBT, TBF kind of stuff, maybe put some put spreads on. There was a big buyer of the April 127, 129 put spread in the 10-year on Friday, huge. I want to say 40,000, some massive number that Jack and Art and Charlie on the floor were talking about. So, when the big guys are doing those kind of trades, you have to keep an eye on the outside parameters of these ranges. I was talking with Gokul in the chat room today. We're looking at the bond chart. Some of these people are putting out this idea that the bonds are going to work their way down to 135 again. I wouldn't be surprised. I think if we start closing below 144.5, basically the lower end of these recent ranges, then maybe we have to start looking for moves like that. So that's the other thing. Obviously, we get back into the swing of things tomorrow. The Fed's buying again. Actually, the Fed's buying the rest of the week. There's one tips auction on Thursday. Next week is the end of the month. We get some more 2s, 5s, and 7s auctioned. I don't think that's going to be a big problem. I think what people are getting a bit concerned about is the equity trade, and the fact that we're seeing new highs for the year, or for the last year, in the S&Ps and in the Dow and in the transports. Actually, some of those, like the Russell, I think, and the Dow transports, are making all-time highs. It really hasn't drawn a ton of money out of bonds. I don't think we're going to see that type of trade. Maybe we'll see less money flowing into bonds than we have. And that might be enough to push the market down here, considering the amount of money that has flown into the bond and bond funds over the last quarter or two, that we're not up near the highs. I think we've seen, previously, as the market did get close to its highs, the 150, 152 area on the bond market. Remember, we were seeing all those big selling on strength Wall Street Journal numbers, and we had highlighted that fact, consistently. And down here near the bottom end of the range, we're not seeing the buying on weakness in the bond funds that would signal a more enduring low than the ones we saw a couple weeks ago. All right, guys. I guess what I'm trying to say short term, I would say buy a dip from here. If the 10-year goes down to 27 plus and looks like it's going to hold, I think take a shot on the buy side down there with a fairly tight stop. You don't want to risk the lows at 22 plus. But I think you can maybe take a look at, you look at an hourly chart, and we have some significant lows at 26. So maybe you want to risk, like a 24, 25 trade on a stop. If you do see any kind of bullish reversal activity down around that C equals A level at 27 plus on the 10-year. On the bond side, you get down 145.09. That's going to be kind of key support there. I don't know where to put a stop there. There's a fib retracement at 145.03. That might not be a bad trade. If you can buy the 145.09s and put a stop below 145.03, that's probably the similar type trade as buying 27s with a 24-ish, 25 stop on the 10-year. And tomorrow we get back into the swing of things. Like I said, we have buyback, we have some housing data, and we'll see what the follies in Washington will bring us here. I think part of the weakness here is the idea that the Republicans are going to put through a sort of short-term debt ceiling fix to avoid any kind of issues, at least over the next month and a half, 2 months. Push it further out, the old proverbial kick the can further down the road trade for the, our guys in Washington that they're so good at. All right, that's about it. Take a look at the Twitter feed tonight. I'll see what's cooking. I probably will see some more of this kind of trade here, even though I'm a bit surprised. The commitment of traders numbers are showing the dealers actually building up their 10-year long position a little bit, and the small specs getting shorter. Maybe the small specs are going to get it right this time. The great bond bearer that they've been waiting for the last 30 years will come and bail them out here. But we'll see. One day at a time right now in this choppy environment. Small positions, tight stops, don't risk a lot. This thing is like a random walk here. Again, on a good rally here, if we get back up to that 3208 area, I'm going to take a look at buying some more of that TBF, TBT type trade and start looking at that. Have a great night, guys. We'll see you tomorrow.